After decades managing trillions of dollars across global markets, a clear pattern has emerged. Four major sectors of the economy are not merely slowing down, they are becoming economically obsolete. These shifts are already underway, accelerating faster than most investors realize, and they will erase hundreds of billions of dollars in market value over the next 5 to 10 years. The companies involved appear alive today, but many are already economically dead. Sector collapse rarely looks dramatic at first. It begins with declining demand, followed by fixed costs that can't be reduced fast enough. Capital dries up, margins disappear, debt grows. Eventually, survival depends on restructuring, asset sales, or bailouts. Technology and consumer behavior drive these shifts, not politics or short-term cycles. Four sectors now sit at the end of that process. Traditional print media is the first sector approaching full obsolescence. Newspaper circulation has dropped more than 50% over the past decade. Print advertising revenue has collapsed over 70% since 2000. Magazine subscriptions continue to fall every year. The core issue is cost structure. Printing presses, physical distribution, inventory, and returns only function at large scale. Digital content removes nearly all of those costs. Artificial intelligence accelerates the collapse. Automated content generation, aggregation, and personalization make physical publishing economically unnecessary. Most print media firms now survive through debt restructuring or asset liquidation. New financing has largely stopped. Traditional retail faces a similar fate. E-commerce sales grow 15 to 20% annually. Physical store sales decline 5 to 10% each year. Consumer behavior has permanently shifted toward online price comparison, selection, and delivery. Physical retail carries heavy fixed costs: rent, staffing, utilities, inventory, and maintenance. Falling sales per square foot make profitability mathematically impossible. Shopping malls suffer the most. When anchor tenants fail, foot traffic disappears, and retailers collapse alongside them. Large mall properties now cost more to maintain than they generate in revenue. Coal is becoming economically obsolete, driven by cost rather than regulation. Wind and solar energy now generate electricity more cheaply than coal in most markets. Renewable costs continue falling, while coal costs rise due to transportation, compliance, and aging infrastructure. Utilities retire coal plants early because building new renewable capacity costs less than maintaining existing coal facilities. Major corporate energy buyers demand renewable sources for price stability and long-term planning. Coal plants increasingly become stranded assets with no economic future. Traditional television faces structural collapse. Viewership declines 10 to 15% annually across age groups, and over 20% among younger audiences. Time spent watching linear television falls even faster. Cable subscriptions drop 5 to 8% each year, with losses concentrated among higher-income, younger viewers that advertisers value most. Streaming platforms, social media, and on-demand content dominate attention. Advertising budgets follow audiences toward better targeting and measurement. Linear television carries heavy fixed costs for content, broadcasting, and sales operations that no longer scale. Each collapsing sector shares the same structure: declining demand, high fixed costs, superior digital alternatives, permanent changes in consumer behavior. Artificial intelligence accelerates the shift by lowering costs, improving personalization, and automating operations for digital competitors. Younger consumers adopt digital-first habits permanently. As purchasing power shifts to those groups, legacy models lose relevance entirely. Value erodes as obsolescence becomes obvious to broader markets. Smart capital reallocates early. Late capital absorbs the losses. Investors face a simple choice: adapt before the transition becomes undeniable, or hold assets until economic reality forces repricing. Want to know how we trade this major technology trend? At TruthSayerAI, we trade every single one of the alerts our AI generates. If you are interested, you can join the thousands of clients already on our app who are taking advantage of these trades every day. Remember, we trade every one of our alerts our machine learning and AI models generate. Sign up on our website. You won't regret it. Thank you for watching, and don't forget to like and subscribe.